and we're going to talk about those ideas. Let's get into your pro picks. Pro Picks is brought to you by ATB Financial. With over $100 billion in assets, ATB Financial is powering possibilities for more than 843,000 financial services clients. ATB Cormark Capital Markets is a leading North American investment firm providing holistic corporate and capital markets advice and full-service financial solutions. Visit atb.com/inthemoney for more information. Okay, before we get into your top ideas, you were on with us January 28th in 2025, and your top ideas at that time were Constellation Energy, NVIDIA, and Marvell. Constellation Energy, peaks and valleys, it's flat since that time. If I recall, it was a play on all the energy that was required to fuel the demand for AI, the power demand. Do you still own it? Do you still like it here? It is flat over the last year. So what do we do with Constellation Energy?
So with Constellation specifically, we took significant profit, mostly because the narrative shifted from you want to be invested in power to you want to be invested behind the meter. And I'll explain a little bit what that means. Basically, power is going to be the main bottleneck for AI growth, not in the next 2 to 3 years, but in the next 5 years, right? So that's really where you want to be focused on to find opportunities. Now, what's been happening as well is that as electricity prices are increasing, all of a sudden there is significant pushback on the power generation companies to not increase prices. And that's really the biggest concern for some of the IPPs. Constellation is the one that we like the most, but we really exited just because of these concerns around, well, sure, power is going to be important, but will they be able to increase prices and generate returns? So we've replaced Constellation. We still have a small position and we disclose all of our holdings on our website, and we're looking for a better entry point, but we've replaced it with companies that now have secured power generation and land, and now they're trying to sign up customers sign up agreements with some of the hyperscalers on a long-term basis. So you want to be invested more in the behind the meter. So this would be power facilities that are not necessarily dependent on the grid, and avoid the grid basically for the time being until there is more certainty around how much can they actually increase prices to the consumers.
What's an example?
So an example would be Terawulf. Some of these old Bitcoin miners, they had secured capacity for Bitcoin mining, and they had kind of done a lay of the land and figured out where are all the underutilized power plants in the US. And they basically have a backlog either of projects that they're currently building or potential contracts that they can sign. So this is really these stocks are very volatile in the market. But if you look at their business, it's not actually volatile at all, because what they're doing is they'll secure the power, they'll secure the land, and they sign a 20-year contract. So you're really getting an annuity based on the terms that they secure. So if you like it today, you should like it for the next 20 years. And they're going to start trading, in my opinion, much more similar to the traditional data center REITs. The business model is not different at all. So there is an opportunity for significant re-rating from here. So I think it's important to go to places that are not as well understood by the market, rather than I think what worked, let's say 3 years ago, is hey, I like nuclear, I like power generation. You can just buy a basket of those companies that have exposure to that sector.
Okay, so you took profits in Constellation Energy, pivoted to, the Terawulfs of the world. NVIDIA, we've already talked about, still like it, but the best gains probably behind it for now. So you own a modest position, and you had a nice gain in NVIDIA over that year. Talk to me quickly before we get into your top ideas about Marvell. This one is down over the course of the year. Did you also harvest profits there? Custom semiconductor maker. So instead of just buying everyday chips like you might get from an NVIDIA, Marvell makes custom ones for custom functions.
Yeah, absolutely. So we did, and we're looking to re-enter or size up our position here. We think they're very well positioned on the Amazon chip. And as you saw, Amazon is spending from 150 billion to 200 expectation for 2026. So they're really levered to this trade. They have struggled a little bit in that a lot of these hyperscalers introduced their ASIC or their custom chip, but they haven't been able to scale it up the same way NVIDIA has been scaling up their chips. So the ramp has been slower, which is why you see the stock not gone anywhere for the past year. But I think there is more to come here because networking is going to be one of the most important ways of getting performance improvement from this chip. So I think it's a really good place to be.
Let's talk about your top ideas now. You said you want to be in networking, capital equipment, and that's what you've brought us. The first idea is Coherent, optical components, AI networking. And boy, the stock has held up very, very well. Talk to me about why you like it and how much upside you see from here.
So Coherent is a very cyclical stock, and the cycle just turned for it in the middle of last year. So when you look at its performance, it's really more driven by the fact that it came from very low levels of from cyclically depressed levels to now being one of the leaders in optical solutions and optical components for these hyperscalers. The cycle, I think it's very important to highlight that this is a bit of a new theme, right? It just turned last year. So I think we're here in the very early innings. We, Amber, as a rule, when we underwrite an investment, we look for a stock that can compound by over 20% each year and double every 5 years. So that's usually our threshold in terms of target price. So for Coherent from today, it still meets that criteria that can double over the next 5 years.
And even though it's run up so much, I mean, you're right. It was like a very flat stock for years, and then it went parabolic. Help me understand the valuation. And does valuation still make sense?
Well, the valuation still makes sense because we're going to see significant earnings reacceleration. They're introducing a new product in the second half. I think it's going to be even stronger performer in the second half of this year. So from a valuation perspective, these stocks were really beaten up last year. Now they're reflecting significantly, they have significantly higher multiple, but that's because we are expecting almost doubling in earnings. So from that perspective, we still think they look very attractive.
Okay, Coherent ticker COHR. Your next one is KLA Corp. This is semiconductor capital equipment. You mentioned Lam as another one. Those I guess would be peers, but KLA, it makes and it distributes semiconductors, has also had a nice run.
Yeah, this is another cycle that turned in the middle of last year. A lot of these stocks have had a nice run, but nothing compared to the way they perform over a cycle in the past. So the main players in semi-cap equipment would be ASML. They make the big machines. And then KLA, Lam Research, Applied Materials, which reported today, they make the etching and deposition. So basically, when you make the chip, you need to add and subtract parts to it. So this equipment really is going to be the next leg of the trade because as we've grown so much, we're starting to become we're starting to be constrained on capital equipment. And that's when you start seeing these things. Like, to give you a sense, they are still they're just starting to grow earnings. And for ASML, it's really more 27 that is going to be the year. So we're very early in the semi-cap equipment cycle. The stocks have moved ahead of it, but nothing compared to the way they usually move throughout the cycle.
Okay, so the last two have already had big moves, but still meet your criteria of doubling in 5 years, or you think it can still double over 5 years. Let's contrast that with Arista Networks, which has actually kind of stalled out. It looks kind of like NVIDIA over the last couple of months. Another AI networking company. Why has it stalled out and why do you like it?
So Arista Networks has stalled out because they reported a quarter where they came ahead of expectations, but didn't quite have a blowout numbers. This is because there is a lot of timing that goes with their projects. Some of their projects are very large in size. So depending on when they get announced and when they get executed, you really see the difference in performance. So we think this is actually a very attractive entry point for the stock because of the reasons of it having stalled out. They're a leader in networking. Again, this is where we see a lot of the upside. And the fact that it stalled out provides a really good valuation, entry point from a valuation perspective.
Talk to me about margins. I know that's a concern when it comes to Arista, its ability to kind of preserve margins and not get squeezed by its customers. What's your outlook there?
So I think investors are overly concerned about margins, not specifically only for Arista, but for the sector more broadly. I think what's happening for a lot of these companies, what they do is hardware that has embedded software in it. So when they do more of a software product, their margins will be higher. And then when they do more of a hardware product, their margins will be lower. The returns on hardware are equally, if not better than software. So it's not necessarily bad, but because mix is changing, you're going to see margin pressure. It's not necessarily coming because customers don't want their products anymore and they're trying to like compete them against other players. It's really more the mix between hardware and software. So I think that's something for investors to be mindful of, because from high level, usually when you see a stock that has margins kind of stalling out and declining, it's a red flag. But because here it's driven by mix shift, we're not as concerned.
I mean, just to give people perspective on how fast a company like Arista is growing, 2023, $6 billion in revenue. This year, it's expected to do 11, right? So almost doubling in just 3 years. How high do you think that number gets? Like, what does the top line look like in 5 years?
Well, it's literally driven by the Capex growth and a multiple of that. So I think that's really like, if you see continued Capex growth by the hyperscalers, if you see continued growth specifically for them, important are also enterprises spending on AI. You're really going to see the numbers continue to grow at this or maybe even a higher rate.
You know, that's a good point. Before we close out, we're sort of taking all these Capex spending plans as law, right? They said they're going to spend it, so they're going to spend it. Is there a risk that this spending is either lower or doesn't come to fruition? I mean, that certainly hasn't been the trend, but do you have to think about that risk?
Absolutely. I mean, you always have to think about risks. I would say that for the Capex numbers that are announced today, a lot of those are based on actual projects that are either locked in or getting locked in, and equipment that's getting locked in. So our companies, the suppliers of equipment, are telling us that they're now sold out 3+ years out. So that kind of tells you that whatever is in the backlog for them for the next 3 years, there is pretty high confidence that that's going to get invested. Now, you do need to be worried about, hey, are these companies seeing the returns on invested capital that they originally expected? And is there a way for them to pull back? And sure, there is a possibility, but if you actually look at who is performing well in the market, the people that are surprising the most in Capex are doing the best. So if you look at the latest earnings releases, Google had on percentage basis the largest Capex surprise, right? And they are the best position, in my opinion, out of the three. Amazon came in the middle. Microsoft has been really lagging, which is surprising because they were the original company to come up with ChatGPT, with their ChatGPT and OpenAI investment. So you would have thought that they would be spending ahead. I think the fact that they're not, it's really hurting them. So we're seeing a clear correlation between who is spending money and how they're performing and expected to perform. So I think that kind of gives us a little bit of comfort here that there is really no way for somebody to stop spending and still compete in the market.
Ivana, such a pleasure. We've learned so much, such an action-packed interview. I appreciate it. Thanks so much for joining me.